I want to just open up the conversation with your view on why SPACs have exploded in the past 12 months.
Well, first of all, thanks very much for having me on. It's a real pleasure. And yeah, it's obviously been an extremely active market. And we think probably the most compelling thing about the SPAC market is that it has really become the vehicle of choice for what we call sort of the companies of the future. The really transformative businesses, technologies, and companies that are going to make a huge impact on the world going forward. And the SPAC market is really the way that those companies are looking to come to market. So it's a very exciting trend.
Now, you've recently launched a new SPAC ETF, and I think there's some concern among the investment community, among regulators, that there's a risk of retail starting to get involved in the SPAC boom via ETFs, given the potential for significant losses. As we've seen historically with SPACs, the best performing deals tend to perform very, very well, but the bottom deals perform really poorly. So what do you say to that concern around retail investors getting involved here?
Well, I think that's a really good point, and I think that's a very accurate observation that you're making, and particularly as more and more issues come to market. Clearly not every transaction is going to be a huge success. There are going to be some very successful ones and others that won't do as well. So we do think that that's a very reasonable concern for the market. We launched our SPXZ SPAC ETF as a way for investors to participate in the SPAC market through a very liquid, transparent, but also actively managed ETF. So, our view is it is a very interesting area, but it is hard for, particularly as you mentioned, smaller investors to be able to construct a portfolio, put together, a portfolio of SPACs when there's so much going on there. So the great thing about the ETF is it's transparent, it's liquid. So particularly, as you mentioned, if there are, if people have concerns in general about the SPAC market, if you have an ETF as opposed to a number of individual holdings, it's a lot easier to move in and out of the market when you see opportunities. So, and the fact that it's actively managed means that, we are, constantly looking at evaluating the companies in the ETF, adjusting the portfolio. And we think that, leads to, a more professionally managed product and one where smaller investors can invest, with liquidity, with transparency, and with some, a good professional approach to the portfolio's construction.
Well, to pick up on your point on price performance, we actually had a guest yesterday from Bain Capital, and they had looked at the subsequent performance of SPACs post-merger, and their findings were quite interesting. They showed that up until the merger, SPACs tended to outperform the overall market, but post-merger, the performance has been relatively disappointing and actually underperformed the S&P. What do you think that is a reflection of? Is it just a reflection of these SPACs coming in at very lofty valuations, or is it that the SPAC sponsors just haven't done a good enough due diligence?
Well, I think part of the question is the time period that data comes from, and I'm not familiar with the study. But I do think that really it's been only over the past sort of couple of years that the SPAC market has really been attracting these companies of the future. And, our view is that is going to be a very permanent trend in SPACs. And, these are the companies where, if you've gotten in on Amazon's IPO, Google at the IPO, et cetera, these are the companies that really do redefine technologies, redefine the world in many ways, and they perform extremely well. And so I think that's a more recent trend for SPACs. And so our belief is if you can get a selection of those kinds of companies, then you're going to do very well. So that's the philosophy in terms of, our approach to investing in the SPAC market.